to the RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Party in the Smarty? No, what rhymes with party? Come on, Smarty, let's go party. I'm a Barbie girl. Actually, you know, we have a celebrity here at TRI. It turns out that we have half of the 1970s disco genre here at TRI. We're having fun taking a trip down memory lane. We have Donnie in the house from Donnie and Marie fame. Not really. Anyway, we're having fun. And yeah, it looks like you've had some work today. Facelift. And how much of her is she fake right now? Anyway, we're having fun. This is actually from my childhood. When I was a kid, I remember these guys were all the rage in the Osmond family and everything. And I remember, like, when I was a kid going, God, can we get out of this age? Oh, the ages, it was just so painful. Definitely a very, look at that, how they shilled it. Even, that's interesting how this pre-search here, look at that, how they've embedded this Walmart bullshit fucking advertising. So I don't know, maybe these pre-search guys are just as corrupt as all of them. That's terrible, the way that they embedded that little advertising in there, cocksuckers. And maybe that's part of the Brave. Who knows? Mind you, and actually, that's something I never did get set up in previous iterations. Was we were supposed to have, using this Brave browser, you're supposed to have the Brave token and get paid. I mean, God, you think how many ads and all that crap from Brave? Look at all this crap here. How many tokens, how many of these damn Brave tokens could I have earned over the past 5 years on this? But oh well. Yeah, bat. That's what it is, eh? Bat. Yeah, what a doofus. I never got that set up. Tell you, man, missed opportunities. Anyway, here nor there, having fun in the market. And actually, it's a very dynamic market right now. Lots of different cross currents, lots of fun, different things to do. Of course, at TRI, we teach you about 20 different ways to skin a cat. Just out of the level 1 program, I suppose about 40 or 50 if you get through the level 2 and level 3. We had our secret options formula club meeting last night. So actually, even ideas that came out of that meeting last night. Some really interesting names and some interesting trade ideas. So we'll probably talk a little bit about that in the after party. Did some banging out doubles today in shitcoin land. Our little bros here, actually interesting, into selling windows. Then I start tweeting out and going, hey, look at me, look at the money. And then all of a sudden the price mysteriously starts to fade back down. It's always a good idea to book those doubles and make damn sure that the trade's done. And actually, one thing I like using this bird's eye is they put little notations where you buy and sell things. And so it makes it really easy when I post tweets and stuff and post on the site. And what a beautiful image. I mean, this is everything I'm trying to teach you people. Wait for an asset that's absolutely collapsed. And then, just be patient. Wait for the W's to come in price, down, up, down, breakout. Let the market rally, let it do its thing off of the lows. I suppose, if you're that ICT fan kind of guy, previous market structure failures. And then, I don't know, do you call this your fair value gap, the distance between that low? Who knows? I don't really use that concept. But nonetheless, reload zones. I mean, God, you've heard me bark about that enough over the years. Get your bids working. You can see I had my bid right off of that double bottom level, right in the reload zone. This is exactly like, actually, I guess there's no level 1ers here in the hangout with me here right now. But in level 1, this is like our bread and butter. El Tangonator kind of setup. In fact, actually, if this had traded off a 78.6, it would have been a shark setup. But anyway, So you get your fill, feeling pretty good, and then woohoo! Hey, nice free position. Make sure to sell at least half on a double. Sell a little bit more. In fact, actually, the note here was shod filled and then some. Actually, got a little bit better of a fill there. So we got a bit of money for the tax man, all that kind of stuff. Better make sure that they're happy, especially in this horribly evil decade, this 2020s. I would imagine that a lot of blossoming capitalists through the 90s and zeros and even the teens, they're going to lose faith in capitalism over this decade. And really, when was the last time you heard about that barstool guy being a monster stock picker and a stock market pro? I haven't heard anything from that guy in with regard to trading in a million years. Well, I guess since the end of that whole sickness stupidity. Mind you, I hear that they're setting us up for another sickness stupidity window. And actually, it's cool. We had one of our site alum, Cole, who is an astrological guru, and every time I sort of mention how the 1% is setting up for another one of these great resets, and then of course 1940s we had absolutely massive inflation into 1947, 48, which I think they're going to do here, part of the Great Reset plan. And oh, mysteriously, the Health Organ, no, not even the World Economic Forum. And who the fuck are these people to know about health? I mean, it's so smacks of corruption. It's ridiculous. But they're getting us ready for disease X. What a stupid name. Just drives you crazy how corrupt all this is. Anyway, it doesn't matter. The most important thing that I can hear, I'm on the planet to try and teach you people to do is what you see on the screen here. And as long as you just keep doing this over and over and over, who cares about all what stupid banksters? You don't have to live in debt. I mean, I have no debt. I have a simple philosophy of life. Neither a debtor nor a lender be. I don't lend people money and I don't borrow money. And then that way, this whole bankster bullshit nonsense is totally irrelevant in my life. No golden handcuffs on me. I am free as a bird. Woo-hoo. And actually, we're heading down to El Salvador to go hang out with some more free birds there in February. So if you have the opportunity, we'd love to see you. And also, too, we're going to try and take a trip down the wet coast. But the wet coast right now is looking a little more like the snow coast. I'd show you a picture of outside my window right now. But geez, Vancouver's getting slammed with another massive snowstorm. So unfortunately, it does mean I won't be doing the big road trips with Lily this week, so which kind of sucks. But oh well, it is what it is. I suppose at 23 years old, he can handle a few days without the old man. All right. So what am I supposed to be talking to you guys? Of course, I always love to just have a whole bunch of rhetoric and stuff. As I said, in the after party, we'll probably go into more detail about sort of specifics of what I'm doing in the market today and trades and stuff. News, like to review just sort of what's going on in the world with you good people on this free channel. And yet another piece of anecdotal evidence that shows that I can't see that the US Federal Reserve will lower interest rates anytime soon. US retail sales rise more than expected. And of course, this, if you are a student of the market, I don't know whether there's really many people that watch YouTube and stuff that actually are students of the market. I think most of I sit there and bitch and complain about how these, circle jerk shillers, hey, Bitcoin's going to be $1.5 million next week. That kind of nonsense. That's really what YouTube's all about, I found in my experience. But for those people who actually really do love sort of the art of the market, the art of trading, learning the process, student of the market, trying to understand economics. There's Brian's funny little channel. You got a whopping 20 viewers right now. But what the hell? We got Donnie and Marie in the lounge, so I'm stoked. Anyway, this is a really important data point. Because of course, the US economy is a consumer-based economy. So if the consumers are out spending money like drunken horse, that's going to be inflationary. What was interesting, I'm not quite sure why, but what I've noticed recently is the actual year-over-year retail sales number that's got everybody spooked here actually comes up as a minor data point. The major data point, they have retail sales month over month, 0.6 of a percent increase month over month, and you can see that was twice what was expected. So to come up with that annual inflation rate for retail sales, right, you have to multiply that by 12, and of course adjust seasonality and all that crap. But nonetheless, down here they had printed it, but you had to look at it like on the sort of the minor data points. If you like pull up major data points, it just doesn't show. But anyway, so retail sales, there we are, big numbers, year over year, 5% increase. Oh, that's not good. That's the Johnson Red Book. And actually, that's kind of a fun little trivia piece for you if you ever see this Red Book. What the hell is that? Well, that's actually retail sales numbers. And I think it's for stores that have a certain history and a certain track record. They're the ones reporting. Retail sales year over year, that's probably the number that I would concentrate most on. And there you can see 5.6%. And the market was looking for 4%. So that came in about a 1.5% hotter than what it was supposed to. Retail sales X autos. And this is an interesting tell because, there's the two biggest purchases that most of these humans make in their life. Number one, their house, and number two, their cars. So often the sort of the analysts, economists, whatever the hell you want to call them, they actually take out things like autos, they take out housing and stuff to get sort of a gauge of, what's the Home Depots, the Walmarts, what are those sales like? And again, 6%, 0.6% month over month, that's annualized that's probably 3 times the rate that these Fed crooks, because keep in mind the whole thing's a scam. They publicly want us to be doing. So once again, awfully difficult to justify any interest rate decreases anytime soon in that phase. Interesting to see. This is a great anecdote on how completely fucked up this socialist government in Canada has gotten things. And of course, I was joking with the gang in the SOF meeting last night that a couple of them are from the southern part of the US. And I go, I bet if it wasn't for me, you would probably never hear the word Canada in your life. And they're like, yep. Most of the people in our neck of the woods, they don't even know anything outside of the county, let alone outside the state and then outside the country. Where the fuck is Canada? I thought Canada was like a whole bunch of penguins and igloos. Anyway, but you can see absolute train wreck in the producer prices for Canada. If you actually looked at this data, you would say that Canada is actually in economic free fall right now. And of course, it makes sense because, this stupid idiot leader of ours right now, he basically tied, our country's future to China. And of course, China is completely collapsing and that whole fraud is collapsing. So you're seeing that anything that's sort of manufacturing, anything that's sort of industrial based in our country is just completely collapsing. And the only thing that's keeping this Canadian economy up is this insane housing bubble. And when it bursts, oh my God, Canada is in so much trouble. Anyway, I suppose we're just going to keep endlessly building high rises out the yin yang. I think I showed everybody yesterday in the meeting last night. There's some interesting videos coming out that Canada actually has a really dirty secret about these international students, and they were actually propping up the Canadian economy by just flooding the Canadian system with all these international students and just completely fleecing them, just rents through the roof, and just because they're rich kids coming from overseas. The whole house of cards is slowly starting to collapse on itself. And it's just interesting to see that if you actually look at the internals of the country, there's some major, major damage being done here. And I suppose also too, we did see the PPI data for the states also come in very weak. So ironically enough, there's actually deflation going on within the manufacturing sector of our society right now. I tell you, when the dust settles from all of this, I have a feeling we're going to have to go through like a decade of sort of the resetting what society actually looks like here in North America. It's going to be an ugly decade going forward. I'll tell you that much by crackers. So the point of the matter of all of talking about this is the consumer, and this, probably speaks to the baby boomer in retirement. They're not doing any manufacturing. They're certainly not doing any work, and they're in retirement. They're spending money on the golf course and on going to Chipotle and all that kind of crap and Chick-fil-A and all that. And they're still spending like drunken whores here. So as a result, you go look at the market, and I think the market had actually started to seriously think about the Fed lowering interest rates. And of course, that would set the stage for higher stock prices, which is also too interesting. I think, the market had started to price in lower interest rates, weaker consumer. And interesting, because of those PPIs and because of the weak sort of industrial data, the inflation picture actually is looking very tough right now. Go figure. And interestingly enough, I had pointed out to you all recently that the US dollar actually has started working a bullish chart pattern. And now you can see, if you had taken this bot setup, and this is just more demonstration purposes, but nonetheless, you can see it working away here. Now we can say, had you bought this bot, you would move your stop to trailing now. And had you taken this trade, well, not probably, you shouldn't lose any money. So move stop to trailing. Hit. And really the way I like to teach people to do this is, just use the 3 high-low method, use market structure to try and help you. So at this case, it might be like that's a dip there. So there's one low. Could you use this as a dip? That might be a bit aggressive. That doji, that's not a bad dip there. We could probably use that. But anyway, 1, 2, 3, that would mean your third low is down here, which is below your entry. So I think at this point, we still just keep our stop at break even and just let some structure develop. And as we get crisper and crisper lows, we can always do the 3 high-low method, count our way up, and adjust stops as we go. But you can see where the profit objective is here. I wouldn't be surprised if that's hit in the next few days, especially considering that January barometer, we were kind of told right out of the gate that the traders were not overly happy with what 2024 was going to look like. Then through the whole day, we can see that they generally were not very happy. They did spring back right at the very end, and they always say, as January goes, so goes the year. So I like the idea that this is probably the path for the year, and then right out of the election results, which is pretty typical, the very end of the market move through the year. You saw it happen in the stock market this past year, literally October 31st. November 1st, the market just turned and went straight up and rallied just straight up into the end of the year. I wouldn't be surprised if we have another sort of repeat performance. The first week, though, oh boy, just one directional, and then a little bit of a pop at the very end, but not much. So put it all together, there's sort of my forecast for the month of January. And of course, as they say, as January goes, so goes the year. So we did get that sort of mid-month, mid-year pop, and you can see the market melting back down here now. It's kind of hard to see with all these other studies, but you can see there, and we're just slowly grinding our way lower here. Also, too, we do have a big LEAPS options expiry coming up here. This is also a, I don't think it's quadruple witching because they don't have options on stocks anymore, but it's probably a triple witching. And actually, sort of a side anecdote, we trade the crude oil Monday to Friday, the opening range trade, my trading partner and I. And kind of noticed this morning there were a number of really weird things. There was a number of econs. I showed you all those econs that all came out right around 5, 6 o'clock. And then we had Fed speakers. There were like 3 different Fed speakers that were all starting to speak. So this was the first minute of the crude oil trade. And then also we had rollover, right? Like I said, this week is going to be this triple witching options expiry, index options expiry, futures contracts expiry. Thank you, Chris. I know I've talked way too much here today, but I'm having fun. So fuck you, authorities. You're demonetized. It's so funny. Listen to all these YouTubers. They're all so stressed about being demonetized and stuff. I don't care. I mean, it's just having fun. Anyway, point of the matter here is crude. You can see the front month here, February, is actually lower volume than the Marches here. That was another warning sign. So we had a bunch of warning signs here today that maybe we better just leave this opening range trade alone. And sure enough, you can see through the first minute, they took the market down, very choppy. Look how thin this trade is here. And then they promptly, well, actually, I mean, they moved it around here a bit, did a bit of a fat finger. I paper trade. I mean, I paper trade everything, but actual live money because of the roll. This is what's called the roll. And we always want to be in the most liquid, heaviest traded contracts. So you can see they're rolling out of February and into March right now. Because there were like 3 different Fed speakers all in that 6 a.m. event window. And there were a number of different econs coming out. I was just like, you know what, we probably just better leave this thing alone. And sure enough, trade fired, and it even said, you know, get your butt in there. I had actually fat fingered the trade a little bit, so I cleaned it up a bit. I was, if it's greater than 25 ticks, I'm supposed to only do 3 contracts, but I put on 5 here. So that was a bit of a mistake, but nonetheless, cleaned it up, and then sure enough, boom, it got stopped out for a full loss. So actually, the opening range trade did exactly what it was supposed to do, given the backdrop of what happened here heading into this event. So, you know, Chris and I both said, you know what, we're just going to leave this alone today. And turns out that was a smart idea. So that was good. All right, so you saw we had a ton of econs. We had a ton of Fed speakers. We have options and futures contract expiry. We have the big LEAPS expiry this Friday, which is basically what, the day after tomorrow. Monday was a holiday, so we had kind of a screwy EIA reporting day today. There was just a whole bunch of reasons to not do much here today. I suppose we'll leave off the free broadcast with just a quick boo at the old corn, and just maybe a comment or two about what's going on there. I did actually do some buying in the stock market today, but we'll leave that for the after party. You know, just quick commentary about the corn and how this ETF saga is going. I don't see any relenting in selling here whatsoever. So I certainly wouldn't be in a big hurry to call bottoms here. You can see we are just slowly cascading our way lower here on this Fink ETF. Lower highs and lower lows defines a bear. It's interesting how we do have an inside bar here technically today. So if there was some sort of miracle and we actually were able to finish the day in here and then tick up through that high tomorrow, that actually gives you a little bit of a bullish signal. It's not much though. I did see people in the lounge were posting earlier this morning that these grayscale people are selling like just like it's going out of style. And frankly speaking, you know, looking at that chart, should anybody that's a TRI fan or a TRI regular or a TRI alum of the school program, should anybody look at that chart and go, oh yeah, that's a good buy right there? You know, that's not a good buy. That's a goodbye. Say goodbye to your money. See you later. And actually, interestingly enough, this 3-bar pattern is actually fairly well known. Number one, actually, You know what? Maybe we'll save this for the after party because I should really wind this up now. But that's actually I can see three different sell patterns that we actually teach at the school program that all fired off of this top up here. And actually a fourth pattern will fire if we go through this low here today. So it is kind of interesting how we do have that potential inside bar here today. But put it all together, that's a nasty looking price pattern. And of course, you can see right across the board, nobody's happy here in Bitcoin land. I suppose for existing ETF and people that are playing the options market, we were talking lots about what they wanted to do here through this LEAPS expiry. And you can see they got it up into like 22, 23 level. And we were conjecturing that I think there's heavy open interest on the $18 calls. They still have 2 days to bring this down, but I think the average right price is around a couple bucks on those 18 calls. So even at 2050, I think they do relatively well. But don't be surprised, folks, if into Friday there's still some more selling here. You can see this thing's riddled with gaps. Look at that gap all the way down there to 19 and a quarter. So there's nothing to be bullish about here whatsoever. You want to actually be bullish? Go and play in Solana. I mean, I don't know what the fundamentals of these trades are, or maybe it's just more just having fun pumping shit coins and stuff. But you know, this is fun. Just make sure to buy W's. Try to buy W's on momentum divergences. Beautiful, good bull div there. Try to buy W's at the bottom ends of ranges after they've just basically thrown the baby out with the bathwater. And if you're lucky, you can start banging out doubles too. So anyway, there's your market report for you. Hope you got some value out of this. I wouldn't read a hell of a lot into anything that you see in the market until we get on the other side of this big LEAPS options expiry event. And also remember too, we're about halfway through the January barometer report. And you know, this 2024 is going to be a bit of a challenging year. So we're still kind of watching how that develops. And also too, didn't really mention this earlier, but maybe in the after party we'll swing around and look at this as well. Maybe we'll do it on Friday. But this is the first 2 weeks of the quarter. So we've got that report also to digest as well. Where is money moving into the market? And hint, hint, hint. Thomas Lee actually said recently in a report I saw, you know, in social media and stuff, that he actually likes the idea of people stepping in and buying the FANG stocks now. So if you know what the FANG stocks are, if you know what sector they're in, if you know what part of the economy that is, if you know what part of that economy is and how it should perform given where we are in the economic cycle, then that should tell you basically where we are in the economic cycle. So we'll leave the free report for the public at that. Come on over to the after party and let's have some fun talking stock, because it is Stock Pickers Wednesday at TRI. All right, have yourselves a great day. PMA for the win. Welcome all the new students. Turns out I'm teaching a class this term after I thought I was getting the term off, but what the hell? I suppose that's a good sign. Have yourselves a great day. All the best, and bye for now.